Supermicro, a tech titan in turmoil. Supermicro Computer, a big name in the server and storage solutions world, has been making headlines lately, and not always for the right reasons. The company, known for its high-performance computing products, has seen its stock price on a roller coaster ride. This volatility comes amidst a series of events including a stock split, a negative short seller report, and delayed financial reporting. Investors are understandably concerned. The stock split, while not inherently good or bad, has done little to calm the nerves. The short seller report, alleging financial irregularities, has cast a shadow over the company's operations, and the delayed financial report only adds to the uncertainty. Supermicro is facing a crisis of confidence. The company needs to address these issues head-on to regain investor trust. Transparency is key. They need to come clean about the allegations and provide a clear timeline for their financial reporting. Until then, investors are left in limbo. Is Supermicro a buying opportunity or a falling knife? Let's dig deeper to find out. Stock split frenzy. A closer look at SMCI. Supermicro recently completed a stock split, a move that often grabs investors' attention. Stock splits, however, don't change the fundamentals of a company. It's like slicing a pizza into more pieces. You still have the same amount of pizza. In Supermicro's case, the stock split might have been intended to make the shares more accessible to a wider range of investors. A lower share price can be psychologically appealing. But savvy investors know that the real value lies in the company's financial performance. The stock split itself shouldn't be a deciding factor in whether to buy or sell the stock. It's crucial to look beyond the hype and focus on the underlying business. What matters is whether Supermicro can deliver strong earnings, generate cash flow, and navigate the competitive tech landscape. The recent stock split might have created a buzz, but it's the company's ability to address the more pressing issues that will determine its long-term success. Short seller attack. Navigating the fallout. Short sellers, often seen as the villains of the stock market, have Supermicro in their crosshairs. These investors, who profit when a company's stock price goes down, have accused Supermicro of financial irregularities. Their report, filled with allegations, sent shockwaves through the market. Supermicro has vehemently denied these allegations. They've called the report inaccurate and misleading, but the damage has been done. The mere whiff of scandal can tarnish a company's reputation. Investors are now left to grapple with the conflicting narratives. Is Supermicro the victim of a malicious attack, or are they hiding something? The truth, as always, lies somewhere in between. It's crucial to approach these situations with a healthy dose of skepticism. Don't blindly trust the short sellers or the company. Conduct your own due diligence. Examine the evidence. Look for independent verification of the allegations. Financial reporting delays. A red flag for investors? Adding fuel to the fire, Supermicro has delayed its financial reporting. This delay, citing the need for additional time to review certain transactions, has raised eyebrows among investors. Delayed financial reporting is never a good sign. It can signal underlying problems within a company. Investors rely on timely and accurate financial information to make informed decisions. When that information is delayed, it creates uncertainty and doubt. Supermicro needs to address these delays swiftly and transparently. They need to provide a clear explanation for the delay and a firm timeline for when investors can expect the reports. The longer the delay, the more it will erode investor confidence. In the meantime, investors should proceed with caution. The lack of up-to-date financial information makes it difficult to assess the company's true financial health. Section 5. Revenue and growth deciphering Supermicro's trajectory. Supermicro operates in a dynamic and competitive market. The demand for their products, driven by the ever-increasing need for data storage and processing power, has been growing steadily. However, the recent slowdown in the global economy has raised concerns about future growth prospects. Investors will be closely watching Supermicro's revenue numbers for signs of strength or weakness. Strong revenue growth would indicate that the company is effectively navigating the current economic climate and capitalizing on market opportunities. Conversely, any signs of slowing growth or worse, declining revenue would be a cause for concern. It could signal weakening demand for their products or increased competition. Supermicro needs to demonstrate that they have a solid plan for driving revenue growth in both the near and long term. They need to articulate their strategy for capturing market share, innovating their product offerings, and expanding into new markets. Section 6. Operating cash flow and margins. Gauging financial health. Beyond revenue, investors will be scrutinizing Supermicro's operating cash flow and margins. Operating cash flow, the lifeblood of any business, indicates the company's ability to generate cash from its operations. Healthy cash flow is essential for funding growth initiatives, paying dividends, and weathering economic downturns. Investors want to see a consistent and growing stream of cash flow. Margins, on the other hand, provide insights into the company's profitability. Gross margins reflect the profitability of each product sold, while operating margins measure the overall efficiency of the business. Strong margins indicate that the company is effectively managing its costs and pricing its products competitively. Declining margins, however, could be a red flag. Supermicro boasts a diverse customer base spanning various industries. They supply their products to businesses of all sizes, as well as government agencies and research institutions. The company's ability to cater to such a wide range of customers is a testament to its product quality and versatility. However, the tech industry is constantly evolving. New competitors emerge, technologies advance at a rapid pace, and customer preferences shift. Supermicro needs to demonstrate its ability to adapt to these changing market dynamics. They need to stay ahead of the innovation curve, constantly improving their products and developing new solutions to meet evolving customer needs. Furthermore, they need to effectively manage their relationships with key customers, ensuring their continued satisfaction and loyalty. The delayed financial reporting casts a long shadow over Supermicro. Transparency is paramount in the business world, and any perceived lack thereof can erode investor trust. When companies delay their financial reports, it raises questions about their accounting practices and overall corporate governance. Investors rely on timely and accurate financial information to make informed decisions. Delays introduce uncertainty and make it difficult to assess the company's true financial health. This uncertainty can lead to volatility in the stock price, as investors speculate about the reasons behind the delay. Supermicro needs to address this issue head-on. They need to provide a clear and concise explanation for the delay, outlining the specific reasons behind it. Moreover, they need to establish a firm timeline for when investors can expect the reports to be filed. The recent events surrounding Supermicro have undoubtedly shaken investor confidence. The stock price has been volatile, reflecting the uncertainty and concerns surrounding the company. Investors are torn between the potential upside and the risks associated with the current situation. On the one hand, Supermicro operates in a growing market and has a solid track record of delivering high-quality products. The company has a loyal customer base and a strong management team. On the other hand, the short seller report, delayed financial reporting, and the lack of a clear response from the company have raised serious concerns. Investors are left wondering if there is more to the story than meets the eye. So, the big question is, should you buy Supermicro stock now or wait? The answer, as with most investment decisions, is not straightforward. It depends on your risk tolerance, investment horizon, and assessment of the situation. If you believe that the recent dip in the stock price presents a buying opportunity and that Supermicro will overcome its current challenges, then you might consider initiating a position. However, it's crucial to proceed with caution and not go all in. On the other hand, if you are uncomfortable with the level of uncertainty surrounding the company, it might be prudent to wait for more clarity before making any investment decisions. Monitor the situation closely, watch for the release of the delayed financial reports, and listen to the company's explanations. Supermicro is at a crossroads. The company faces serious allegations and needs to regain investor trust. Their response to these challenges will determine their future. Investors should demand transparency and accountability. Until then, caution is warranted.